Look around the US and you will find a very diverse nation. Prices range from affordable to insanity. Infrastructure can be an entirely different situation in one part of the US to another. But one thing is consistent. The corporations rule it all. You came here for the truth, so let me unveil that for you. Today we are going to look at the United States cost of living and so much more. Let's begin. Composite cost of living, 2017 annual average. You can take a look at this, and what you will find is that there are a few select states in a concentrated area that are very expensive, to say the least. Whether it is California on the West Coast or New York on the East Coast, we can tell that there are different areas of the US that are far more expensive than others. But if you drill down further and you zoom in, you get an even more detailed picture. So if I were to take New York, for example, the most expensive area obviously is Manhattan. And we can drill down even further and look at the more expensive areas of Manhattan compared to others. So we can't just generalize, although we must in certain instances, but clearly there are areas that are far more expensive. If I say, for example, California is expensive, well, there are definitely cities out there that are not as expensive as others. There are areas where there's significantly more population. Wherever there tends to be more population in one area, there tends to be a lot more of everything else, and oftentimes that is coupled with more expensive prices. Now, the cost of living is going up at a rate that, quite frankly, isn't being disclosed by the government, and that is truly unfortunate. When you look at the rising prices of food in the US, we have shortages all the time that are being seen on the news. We are witnessing everything that's been happening in California, different areas. And despite that, food inflation, according to the statistics that I saw, that I've covered here before, food inflation was approximately, if I remember correctly, 1.6%. 1.6%. I'm sure that there would be most people here listening to this who live in the United States that would say 1.6% inflation on food is completely inaccurate. All right? And I'll leave it at that, but basically you can see where definitely the cost of living increases are concentrated. It's very clear to me. Now, again, it depends. It depends on your situation. Maybe it's just you. You're one individual. You grow your own food in your backyard, and you live in the middle of, Kansas or something. You may not experience the same thing as a family of 5 living in Manhattan, and, you have 3 cars and 2 houses and a cottage and everything else. Okay, you're going to experience a different situation. But we'll take it for what it is. Now, New Jersey, that's one place that is extremely expensive, that's becoming more expensive, and I'll get into that more in a moment. But I want to show you this chart here. 2017 annual average cost of living. So right here, Mississippi on the top of the list, goes down all the way. I know the font is probably quite small for you, but Hawaii at the bottom of the list. So it shows us here how expensive different areas are, but it also gets into the, breaks it down basically. Food bills, your housing, utilities, transportation, health, miscellaneous. So if you're interested, you could see this for yourself depending on where you live, see if it's accurate. I'd be interested to know if you think that this is accurate, at least when comparing one state to another. And again, as I said, you're living in one part of the state is going to be completely different. I know a lot of people that are from Illinois. I always cover Illinois here on this channel because I know that people are definitely feeling it in Illinois. But I saw the property taxes. People were telling me they were paying $10,000, $15,000 for property taxes. And then other individuals were saying, I live in this area and the property taxes are significantly lower, or I live just across the border in this state and it's significantly cheaper. So I obviously would like to know that information. And one thing, just to interject for a moment here, at the Money GPS, you're not listening to a guru. You're listening to a person who aggregates data, who puts it all together. One of the most important sources of the data that I bring to you is from the Money GPS subscribers. So I'm always getting new information from you. So I piece that together. I read all the comments, or as many as I can. I reply to as many comments as I possibly can. Why? Because it's so important to get information from the grassroots. I don't know if this chart is real, but if I hear it from 15 or 20 different people in the comments, I'm going to take their word for it. Okay, moving on here quickly. New Jersey, okay? I don't know what's going on here, but in New Jersey, they have this idea that if you are going bankrupt, the best thing to do is simply impose new taxes. And they're putting taxes on basically everything that they can. And unfortunately, it's going to be a very big mistake. Raising taxes, that's all a government can do. If they need more money, they raise taxes. If they, the sun comes out in the morning, they need to raise taxes. In Canada, the taxes are absolutely astronomical. They keep rising, but the way that they do it, see, people say, what do you mean? My income tax has been the same rate for this long and that long. Look, there's never been a time in which taxes can be lowered without taxes rising in other areas. So you'll find maybe your sales tax will increase, or they start putting carbon taxes on. As soon as they feel that shortfall, this is what they do. And they're showing us that, they're proving it in New Jersey right now. Now they're going to tax millionaires and retail sales to fund the record $37 billion budget that would boost spending on schools, pensions, and mass transit. Now, if you are going to tax millionaires, let me tell you what's going to happen. Those millionaires own corporations, okay? They're going to take their corporations and they're going to open them up in Delaware. They're going to open them up in Nevada. And if you push them really hard, they're going to open them up offshore. And what are they going to do? Well, they're not going to pay taxes to their own states, or they're going to pay the minimal amount. They are going to do what they can to get around the system. That's just the way it is. Don't tax the millionaires increasingly, because they're just going to move and you're going to lose all of that revenue. You were getting some of the revenue, you were getting a lot of it, 50% of that individual, if they're taking in income as an individual. But they don't think like that, of course. It's all about getting votes. The proposal, 4.2% higher than the current fiscal year's, relies on a tax for the wealthiest that has yet to be approved and lacks support from key Democrats in the legislature. It also reverses pledges from the predecessor, Chris Christie, to lower taxes in a state where the living costs are among the nation's highest. So already near the highest, and what do? You increase taxes. It's a big mistake. Taxation does not solve any problems. It simply burdens people further. It is a black hole. It is a black hole. Your taxes keep going in. No matter how much you pile in, it can fit as much as you can put, no matter what. The government is getting trillions of dollars flowing into its system of taxation, and it doesn't do a single thing. Never have they ever said, we have too much money, no thank you, don't give us any more. They simply add a new tax on, carbon taxes and everything else. Gas taxes, property taxes, income taxes, sales taxes, taxes on, everything. The air that you breathe out, that's carbon, that's getting taxed, okay? Now, I'm going to move on here from this. The hours Americans work to pay a mortgage. Right. Looking at particular cities here, this should give us a decent idea. Seattle, for example, you're looking at 73 hours to pay a mortgage. Compare that to New York at 113 hours. It's It's interesting to see how much you get paid, how much the average mortgage is. Doesn't really break it all down, but it's a good explanation for how much things really cost, right? Look at Los Angeles. Okay, 112 hours, very, very expensive. Compare that to Toledo, Ohio with 17 hours. Okay, big difference, big difference. And it's not just, well, housing costs more in New York. It also is a factor of how much people are getting paid. So in these places like New York, like San Francisco and others, the houses obviously much more expensive, but the wages do not correspond. And that's very, very clear. Shows you that here in this chart. More affordable housing. New York City income gains between 2014 and 2017 have outpaced increases in rents. So interesting to see the blue line here, median income, and the purple, median rent. So you'll see that as a interesting factor. I don't know how they came up with these statistics, but apparently that is the case. Rents must be factoring in this. Housing costs are taking a smaller bite out of the typical household's monthly budget. According to the survey also shows a record amount of new housing and the third highest rental vacancy rate since the Bureau conducted its first survey in 1965. Driving the changes is a surge in construction over the last few years and a strong economy, I would disagree, in which the growth of jobs has outpaced the increase in rents. The economic gains are beginning to benefit lower income groups. A near decade-long rising economic tide really is starting to lift all the boats. The trends are all positive and encouraging and bode well for improved rental housing affordability. Wow, I've been lied to before, and here is another bit of that. America's companies, switching gears here, America's companies have been powering ahead for years amid growing profits. The recession that began in 2007 seems an increasingly distant memory, yet the situation has a dark side. Companies have binged on debt. For now, as the good times have coincided with a period of record low interest rates, thank you very much, markets have been untroubled, but a shock could put corporate America in trouble. All right. Quickly, one stat. The total debt of America's non-financial corporations reached 73% in the second quarter of 2017. Guess what? How many times have I said this? Record high. Wow. Nobody cares. Measured against the earnings before interest, tax, depreciation, and amortization, the net debt of non-financial companies in the S&P 500 hit a ratio of 1.5 at the end of 2016, a level not seen since 2003. Well, we got a big problem on our hands. Too much debt in corporations, too much debt on the individuals, too much debt on the governments, and ultimately it will bury everyone who takes it on, because that is the system of the corporations. Now, there is one corporation who is always behind the nefarious acts that take place, and Goldman Sachs is definitely one of many. Interesting here, this article is an interview with Nassim Taleb, one of the most wisest individuals. If you've ever read The Black Swan, a lot of people use the term Black Swan, but I've never read the book. It's a difficult book, I'm not going to lie. It is very, he's quoting Plato, he's quoting all these individuals that people probably haven't read before, other than maybe quotes here and there. He's getting into a lot of detail, using very complicated language. Anyway, Black Swan, read it if you can. And he said a few things. Among them is the fact that he wants to see Goldman Sachs go bankrupt. Very proud of him to say that. Now, this is what I wanted to get to. To finish off for today, our conversation concludes on an optimistic note. This is what he said. We've survived 200,000 years as humans. Don't you think there's a reason why we survived? We are good at risk management. And what's our risk management? paranoia. Optimism is not a good thing. Is the paradox, I ask, that human pessimism offers grounds for optimism? Exactly. It's interesting to think about it like that. And this is a policy that, it's the way I like to look at it. I like to really side with caution. When I see something going crazy, I take a step back. When I see people are saying, this is it, this is going to be it, I'm going to put all of my money into this, I'm going to do this, I'm just going to go for it, or even, culturally, things that happen around you. You're seeing everybody just lining up around a particular store. Suddenly, I never want to go to that store. Maybe that's just the way I am. If I see some crazy euphoria and sort of this social gathering, and all of a sudden everybody is doing one thing, I immediately have to excuse myself from it and can't be a part of it. In general, of course. It's just, I don't want to be a part of that sort of herd mentality. There are reasons why you would want to be, I guess, historically and inherently why we have herd mentality, but it's something that I I don't like to take part in it. Anyway, so what he's saying here, it's interesting. So I hope you find it interesting as well. If you found this video informative, then please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, there's a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.